Good evening, everybody. Hey, Jolanda, Alice, Jail, Tracy, and Curtis Chamberlain. How's everybody? Hope everybody's doing fine. Please let me know if you can hear me okay. Okay, that's a yes. That's a yes. Thank you. All right, we're gonna get started. Let's give it, it's 9:01. Let's give it to 9:02. Appreciate you guys getting on time, but we'll give folks one more minute and then we're gonna get started. One more minute. 1 minute. Okay, there we go. 1 minute's up. We're gonna get started. Again, I appreciate you guys getting on the call. This is change the name up a bit, but just kind of keeping it to the title to kind of reference what we're going to talk about, and that's Friday Night Fundamentals, or Market Fundamentals. And for those of you all who do not know me, my name is Greg Whitmire. I'm an IML student, been a student of the IML Academy for 1.5 years, and I don't know what else to say. Well, that's it. I'll just leave it at that. I'm not getting into a whole bunch of backstory on it, but that's about it. I've been trading and a student. I put student first. I've been a student, like I said, for 1.5 years. And I encourage people to do one very simple thing, and that's chase the information. Hey, David, how you doing? Chase the information and the money follows. I'm good, I'm good. So we're just getting started. I'm just doing a brief introduction, and everybody can see everybody's name. So, just, get to know each other. One team, one dream. All right. So I'm gonna switch over. I'm gonna start sharing my charts. Basically, the agenda for tonight, we're gonna talk a little bit about market structure, and we're gonna talk a little bit, like about half and half, between market structure and the Harmonic Scanner. Actually, I'm gonna start off with the Harmonic Scanner. And so let me start sharing right now. Sorry, my browser went down. Oh, and let's do this too. Each of you are, oh, hi, Marsha. And that's Jojo. Okay, cool. Here's one of the things that also too, if you're the couple of names on here who are not directly on my team, one thing that you have to have, if you don't already, and that is an educator. You have to identify educator on the platform. And again, if your goal is, if you became a student of the IML Academy in order to become or learn how to become a professional and consistent and profitable trader, you have to find an educator on the platform. My educator is Manny Q, and that's the information that I pass on to my team members. And I always just kind of say there's a few chapters ahead, but we try to learn together, we try to grow together, we make mistakes together, we win together, you know, the whole process. Okay, so get an educator. It doesn't have to be Manny Q, but it has to be somebody on the education platform. All right, so I said a minute ago I'm sharing my screen, so let me stop talking and share my screen. I'll bring over some charts. Actually, like I said, we're going to start with the Harmonic Scanner. I'm just going to do a brief introduction of the Harmonic Scanner. I know the folks that are on my team have heard this already. But again, trading is repetition. Trading is doing the same thing over and over and over and over and over again. So we can't hear the information enough. I thought I had it open here. I do not. Let's just go back to it. And again, the Harmonic Scanner, it's the platform's proprietary chart. I call it a smart chart. It's built with algorithms and other coding and mathematics and such to enable the chart. To produce certain information. It identifies patterns in the market. And that's, again, harmonics references geometric patterns in the market that are identified, be they like highs and lows, but basically they're identifying points of entry in the market. They identify a point of entry, they identify a point of exit, which is either your stop loss or your take profit. And if you haven't seen this before, hopefully you guys have. Again, that's what I'm displaying now. Let me just darken up this arrow because I want everybody to see it. But basically, any chart that it just, this by default, it just opened up to this JAFX. But again, on all the charts, it's going to do the same thing. It identifies the entry, it identifies a stop loss, and it identifies 3 take profits. Okay. If you know nothing else, if you learn nothing else about trading, and you use the Harmonic Scanner, you're still putting yourself on every trade basis in a position to be profitable. But what we learn from our educators, the harmonics educators, like I said, Manny Q is the one that I follow. We learn how to then layer with our additional understanding of the market, with our additional understanding of a set of indicators, how to then increase the probability of successful trades using the Harmonic Scanner. And that's what we're going to talk about tonight. So we use what's called the I don't know, again, I know the people that are on my team, I know you guys hear this ad nauseum, but the scanner sauce. Okay, the scanner sauce is what we use, and I want to talk about the scanner sauce, and then we're going to take it up another level, so that we again can just build on our understanding of. Build on our understanding of the market as it relates to the sauce, and we want to be as informed as possible when we're getting into trades. And I always say that, and again, I speak for myself, and if you agree or don't agree, you're welcome, to your own opinion, because I know people come here with different goals and different ambitions. But my goal, like I said in the beginning, is to become a professional, consistent, and profitable trader. And so that means that I have to know a lot. I have to know a lot. And when, like I said, when you plug in with the educators, you get a sense as to how much you need to know, because these men and women have been doing this, multiple years. And it is really humbling to know that, the work they put in is the same work that I have to put in, that you have to put in, again, if your goal is to become a consistent and profitable trader. And they can look at these charts, they know the story, they know how to get in, how to work this information to profitable situations. So anyways, like I said, I'm gonna talk about the scan. I'm gonna go through the sauce really, really quick, because like I said, I want to build on it and incorporate market structure with the Harmonic Scanner. And hopefully, like I said, this will make sense to you guys. But anyways, what we do with the saws, we're looking for four particular indicators, confirmations, I should say. And you can see on the chart, I have, actually, let me turn off. I got 3 McGinleys, a 20, a 4, and a 50. I'm a hide the 20. I'm a hide the 50. So now we're just looking at the 4 McGinley, which is the most important one that we look at on the scanner saws. So I'm just going to click through a couple just to see if we have anything that we and of course the market's closed, but just for the sake of what might be a good example, that's a close example of this. These are all these are those little in the middle are just all cryptocurrency or digital currencies. We're going to find an FX pair that we can just look at. Well, we'll use this part of the market here. Okay, so basically, and just so you know, again, if you're just seeing this for the first time, I'm going to be focusing on this section of the market. Okay, this section of price. Well, let me say first of all, again, and hopefully everybody understands this. And like I said, we were just focus on fundamentals, but candles. Let's talk about candles for just 1 second. And when you see a candle, I hope that from your training, from your understanding, from your getting through the boot camps, the academy, that you understand that the candles are but a visual representation of price. So when I hear people talking about candles, you know, the candles up, the candles down, that's fine if you want to relate to it that way. But at the core of your understanding is that this all is about price. Everything that we're doing is about price at a specific point in time. That's all that matters, is where is price, okay? Now the candles just represent, like I said, they represent their visual representation of price over a specific time. And depending on the chart that you're on, the candle then just represents the price over, or a collection of price over a specific time. But price is always moving in the market. Price is not a static thing. It's always moving. It's in and out of particular zones, and then particular pairs move. Some move faster than others. If you're familiar with US 30, that's probably the most recognized one for the speed. But some of the FX pairs, like the GBP, JPY, as an example, is a very, very fast, very volatile FX cross. So, and then there's ones that move very, very slow. But anyways, let's just talk about the sauce really, really quick, the scanner sauce really, really quick, so folks know what we do and how we look at the market. So for instance, what we're looking for, confirmation number 1, is that we're looking for well, first of all, we look at we look at the scanner just to see what it's giving us. And in this instance, the scanner is giving us a sell setup. And we know that because, of course, our entries are here. Our take profit is below our entries. So that's what the scanner is giving us. And that's what we do. We just do what the scanner is giving us. All right. At least right now, that's what we do, is what the scanner gives us. So we look at it and say, okay, the scanner is giving us a sell. All right. That's the first little piece of information we just need to digest. Based on that, then we come to our candles, we come to price, and we're looking for a candle that closes with a flat bottom. These are Heikin-Ashi candles, and we use those because those represent a good representation of momentum and trend in the market. So we look for the first flat bottom, first flat top candle that closes on the downside of the 4 McGinley, which is this green line right here. And once we identify that, we then look to our next candle for entry. Now, that's just kind of step 1, because we have some other conditions that need to be met. So we're looking at this candle for potential entry. Guys, please make sure you mute your phones. You can certainly unmute if you want to talk, but your mics are pretty sensitive to pick up a little back. Andre, I just unmute if you need to say something, my brother, but I think we're catching some of your background noise. But anyways, okay, so we look that candle. It's still about it out there somewhere. Okay. All right, I don't see you. All right. So, anyways, we look at that particular candle as a start, as a starting point, and I'm just going to double click and then just close that back up. So now we're looking at our other indicators to find out who's in control. That's all we want to know, real simply put, and just like that, for the purpose of quickly moving through this, we just want to know who's in control, and we're going to go with that momentum. So I'm just going to put a line here, a vertical line, to mark our first identifying that particular candle that closed below the 4 McGinley. And I'm just sticking it up a little bit and just make it, this is small little preference just to make a little dash line. So and again, just a visual cue. And then the next thing on our stochastic, and again, real quick explanation of the stochastic. If you don't know or not familiar with the stochastic is a representation of volume in the market, and again, an indication of who's in control. And what we're looking for here is whether or not the seller, we want the sellers in control, and we're simply just using the colors that are available. We're using 2 simple colors, red and blue. Red is the seller, red team, blue team. All right. Right now, we want to go with the red team, the sellers. And so in this instance, on the stochastic, we can see that the red is on top, the red line is on top, and I'm going to just drop a vertical line there, just again, just a visual cue. And then we come down to our oscillator, which is again a momentum indicator, and we see the same thing, that again, the red team is in control. I'm going to drop a vertical line there. And then we come down to the DMI. The DMI is a trend indicator, and I'm going to drop a line there. And again, in every instance, we want to see that the red team is in control, the sellers are in control. Now, when it comes to the DMI, there's one additional area we want to check. We want to just validate that not only whether or not the red, in this instance, since we're looking at the sell, is on top of the blue line, or the sellers are in charge. We also want to look at this black line, which is called the ADX. Did I say that right? It's the the ADX. Okay, yeah, the ADX is the black line, and that is actually an indicator of strength of trend. Okay, so we know what the trend is basically based on which line is on top of the other, and then we use the ADX to confirm the strength. And we're looking for that ADX to be above the 40. Okay, so I'm gonna drop a horizontal line down here. And again, it's just a manual line that I put in here. And again, helps us with a visual representation of where we need, and then I'll set the coordinates to 40. And again, it's just a manual insert of that particular line. And we can see right at this point that the black line, the ADX, is above our 40, which is our goal, basically. All right. So that basically would have been, our checkpoints have now been covered with respect to validating entry on this particular trade. And what we usually do, and again, we just use what the scanner has given us, and see, we would have got in this trade right around, we got entry here, so we would have got in a little lower than entry. And we've kind of set a little bit of guidance for ourselves and say, we can take that from where we get in, we can take it down safely 15 pips. Or if you feel like being aggressive, you just go to the next TP that the scanner gives us. So let me move that over. And you can see in this instance, if we got in on that we got it, certainly if we got into the opening of that candle, we would have and followed it down to TP2. Again, just doing what the scanner gave us. We could have got it at TP1, 18 pips, or TP2 at 36 pips. And then you move on to the next trade. Now, and again, that's the scanner sauce. That's how complicated. that's how straightforward it is. And the idea is that this and again, setting up your, and again, everybody on our team already has these settings in place. And the idea is that anybody, this is available for anybody to be able to do, regardless of experience. After a couple of weeks of just, again, setting this up for yourself, or shucks, well, I'll give it a couple of weeks, but again, at your own pace with no additional understanding, you can, again, enter high probability trades again and again and again and again, using the scanner source confirmations on the harmonic scanner. So now so that's that. So I'm gonna take this, let's take this to another level, because there's more we can do with this. So in this, and I'll use this right here, Aud Jpy. Let's look at Aud Jpy, and we saw what. Let's look at this on the scanner. We see what the market has done. Actually, let me go up the time. Let me go up to the 4 hour on this. Hopefully, I can get it, get the resolution such that we can look at it. You know what? I'm not even gonna try. Let's go out of here. Aud Jpy. Let's look at it in trading view. Aud Jpy. Okay. So let's look at now trading view. Real brief explanation of trading view. Again, I know everybody on my team has heard this, and for a couple of people who are on the call who are not directly on my team, let me give you a brief overview of trading view. Trading view is just a chart. There is, if you want to know how to use trading view, there is a tutorial on educatormanuq.com. You can come here, go live, and it's a trading view tutorial right here, 26 minutes and 7 seconds. Excellent overview of trading view, how to use it. And even if you've been using it for a while, it's still, and if you've been using it and haven't looked at it, it's still a great resource, because again, we can always pick up something from just diving back into some a resource. So that's there. Let's go back to the chart. Okay, so and you can see, I guess you can see from the markers on here that I was looking at this earlier. So Aud Jpy, I always start on the higher time frames, because I want to get an overview of what the market is doing. Where am I at in the market? When you're trading the Forex or digital currency markets, when this is indices, FX crosses, digital currency, whatever you're doing, the first thing you need to know is where you are in the market. All right, what's going on? Am I trading in an uptrend? Am I trading in a downtrend? Am I trading in accumulation or consolidation period? What's going on? Okay, let's get this. Hopefully, I'll remember to bring it back. But that's the whole point of, again, starting at your higher time frames. Oftentimes, I really like to start at the 4 hours. Sometimes, depending on what I see or don't see at the 4, I might go up to the daily, again, just trying to get a sense. So actually, let's do this. Let's start here on the daily for Aud Jpy. And again, we want to just get a sense as to what the market has been doing. Now, ultimately, and you know what, let's drop all of these lines. Hopefully I can remember, but I had them on there for a reason. Can't remember why, but anyways, what we want to do, and the point of looking at the daily, is what has the market been doing. You always look to history, because that's what the scanner. I'm gonna jump back to the scanner just for a second. That's what's going on with the scanner. We come down a couple of time frames so we can see. That's how these harmonic patterns are developed. Okay. The mute your phone. There we go. iPhone. All right. Thank you. All right. So, and you'll hear traders always talk about look to the left, look left, look left. Okay, because that's where price is coming from. That's your history, and where price came from is where price is going. All right. Now, and again, that's how these algorithms are built. These geometric patterns. That's how they're built. They're just built on history. The intelligence that's built into this chart has a way of just knowing based on historically when the market has reached these certain points, it then just attaches these particular geometric patterns, and then is based again able to then come up with our entry, take profit, et cetera, et cetera. Okay, well, I talked about that. So let's just go back here, because what we want to start being able to do is develop some sort of analysis. Yeah, we can see clearly, and let me just go back to the, I think we were on the 15-minute. We can clearly see what the scanner, and again, for all practical purposes, we could just take this information, all right? But we want to be better than this. We want to, we want to be able to trade every segment of this market, and that's what we're going to kind of at least scratch the surface on a little bit today. So Aud Jpy, we come up here on the daily, and then again we use our tools that we have available to do little stuff like, again, what direction is the market trending? The market has been trending upwards, okay? And again, you can just, even if we didn't put a marker on here, we know that the market is trending upwards. Actually, I'm not going to use that. Oh yeah, I'll use that. But how you want to make sure that you understand these little fundamental things. Let me digress for just 1 second, folks, and again, I'm feeling like somebody needs to see this. So again, we're looking at a upward trending market. It's going to move in this manner. Okay, just like if we're looking at a downward trending market, we're going to be looking at, okay. I'm sorry, I messed that up. Let's get out of that. Oops. Trying to show off again, Andre. There we go. Get out of that. Oh, here we go. All right, just like if we wanted a downward trending market, we're going to see movement in that manner, where we're establishing lower lows, lower highs. Like over here, we're going to establish higher highs and higher lows, higher high, higher low, and then it's going to peak out and then start coming down in the other direction, creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then lower lows. So that's your measure. This is really your measure for validating whether or not you have a trend. You're going to be looking for these in this instance, these higher lows. You're always going to be looking for higher lows. Higher lows. All right. I guess, well, you get what I'm saying. And then just like, and this is important. This may seem, redundant, like, but again, this is how you got to really train your eyes to really be able to recognize, because the first thing you have to know is where you are in the market. What the heck is going on? Where am I in the market? Because it's no joke. It's not just a cliche that the trend is your friend. And you want to, you're going to have a much greater success in your trading with the trend than against the trend. Okay, so it's really important to be able to recognize that. And again, I encourage everybody, if you're not already doing it, find a pair, find 1 or 2 pairs this weekend. Okay, go to your daily. It's easier to do on the higher time frames, because as you roll down the time frames, you're getting more candles. It's like a magnifying glass as you keep going down the time frames. You get more and more detail about that particular market. So you want to be able to come here and start using these little tools, these little lines or whatever, experiment with them, and then start finding on the market, where's your high or low? Your high or high. And again, you don't have to be perfect. And then your high or low, try to grab that. And start building these visuals. And what happens is that in your brain, you just start seeing these. You just start seeing these, and then you start seeing opportunities, because what you know, like just say in an upward trending market, you want to be able to, you know, again, trade with the trend, and you want to be able to know where, if there are any points or opportunity, where can I get in the market? Now, again, you can be a signal taker or you can be a signal maker. It's you know, it's simple. Now, if you want to be a signal taker, just stay taking signals. If you want to be a signal maker, then you have to start being able to see this stuff live, and then seeing these opportunities as they exist in the market. All right, and let's just tighten this up a little bit, because again, this would be real. This, if we were looking at this, we'd be looking at real opportunities where we would see market come back. Let's make this yellow to stand out a little bit. I'll make this line yellow. We were looking for, if we were trading in this segment of the market, you could see where we would be having opportunity. The market went up here. Let's put another little, put this last little one here. Get rid of that. And I just want that. Okay, so we saw the market come up here to a high and come back here to a higher low, higher high, higher low. So again, these are opportunities. When we can see with your eyes that the market came up here to a higher high, and then you wait, okay, because okay, market's going to come back to structure, okay, and these are imaginary lines, by the way. Okay, these little, you know, they're not hard and fast. They don't make the market do anything. You're just simply trying to use what you see in order to, and trade in the direction that the market is going, in order to provide opportunities for yourself. So you see the market take off here, and once you have a second point, that then, that then represents, now you're officially in. Once you get a second point, now you're officially, just those two points now officially give you an uptrend. Okay, you got a takeoff point, and then you got another touch point here. You got a higher high and then a higher low. You're now in an upward trend. So now what you're waiting for is market. Then you draw your trend. Then you draw your trend line, and again, you do it with your eyes. I suggest you in the beginning, because let's just say this is all you had in the market at this particular point. So now you just draw what would be an imaginary line in this direction, and you just wait for the market to come back to structure. And then guess what happens? Just what we said would happen. I mean, just what you see happen. Market comes to this area, it goes up, it comes back to this area. I'm sorry. It comes back to structure here, and then that's where you get in the market, as an example. And you just do this again and again and again, and then you buy it up here. Market comes back to structure, you can enter again, or you could exit the trade, or, you know, but again, or you could, or again, if it doesn't break your structure, okay, if it doesn't break your structure, you got to keep in mind you're still in an upward trend. As long as you are still establishing higher lows, as long as you can keep putting these little things in the market, and as long as you can keep putting these, you're still in an upward trend. Now we can see when we get up in this part of the market kind of starts in a downward direction. But guess what? We haven't established a new lower low. We have an equal low. We've established an equal low in this area. And again, I just see it with my eyes. We've established an equal low, not a lower low. So we're still in an upward trend. Technically, we're still in an upward trend. This represents a bit of a pullback in the market, but we haven't established a new lower low. yet in the market. We established an equal low. And what happens with an equal low? Oh, let's do this. Because again, we want to get our mind trained about structure. I'm gonna just keep pulling this line all the way across. And look, and again, just with your eyes, just follow where that line just sets itself up. It sets itself up. Let me just keep going. It just sets itself up at points in the market where price has either been support or resistance, at least all the way back through here, all the way back through September of 19. All right, we see only time price went through here in October of 2019 and then rejected. All this time from October the 11th of 2019, price never crossed this area until January of 2020, January 28th of 2020. And then you see it still hovered in this area, kind of played around this area, still really didn't break out until February 24th of 2020. So now we're putting some history together. Now, once we move down to the lower time frame, we can have some confidence as to what price is likely to do based on where it is. So I know I'm spending a lot of time up here, but again, that's the whole point of taking a good solid look at what's going on from a market structure standpoint at the higher time frames. And you can see all through here. And again, because market came down and then of course it rebalanced itself and pushed itself up back here. And again, established another what? It established like we identified, it established an equal low, it established an equal high. And again, we're just doing this just based on what we see. And again, all this just means, all this is helpful in terms of just digesting this information. So we know also too, shucks, price has just really been operating in this particular zone since, let's bring this out. Price has really been operating in this particular zone since all the way back here in May of 2019. All right, with the exception of this big breakout here and then back here to the upside. And then what did it do? It came right back into the zone. And what did I say when we were looking over here at the Harmonic Scanner? That price, well, all price does is go back to where it came from. Now, when it's going to do it, I mean, if we knew that, shucks, you know, y'all wouldn't be talking to me now. I would have made my 5 million and been gone. But we do know that it's going to return. So let's go back to that. Okay, and that's what it did. We found price right back in this zone, and we can see how for all those many months, price either didn't or if it did, it was either support. This zone represented support or resistance for all of these months, and price is right back into this zone. Okay, so and we also said that price is we're in an upward trend. And here we go right here. Let's look at this, something else I just saw. Make another little mark. We created a new high. So that shows us a willingness for price to break out of the zone. Price hasn't been up here since, like I said again, price hasn't been out of this zone in the bullish direction since May 13th of 2019. That's over a year ago. That's more than a year. Right? May, yeah. I see May, June, July, August, September, October, November. A year and 6 months, 18 months. Price has just worked in this area. Let's see what this. Let's get a sense as to. Okay, so it's about a 250 pip. Price has just been moving about 250 pips. Across all for 18 months. It's just been bang, 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 bang. All right. And now here we are. And this is where we are right now. So now let's I know I was probably over talking it, but again, hopefully you guys understand why I'm kind of spending the time talking about this. So price right now, we are here. All right. Actually, that last one, I'm trying to box up the last one. Yeah, so that's where we are as of 5 o'clock today. All right, all that said, and we're still in this particular zone. So I'm gonna go back to the scanner for a minute, because the scanner on the 15-minute, we can see that what the scanner like I said, we used our example of how we would have identified the scanner source, but now that's already run its course. Okay, now we can take this another level, because again, we're getting our understanding about understanding market structure, and we can use this information. So now we see, oops, in this area of the market, we see, of course, that there's a bit of a rally. So where is price going, and what's the likelihood of a continuation in this particular direction? Now we look at our current. Let's go back. We look at our current set of indicators, and we can clearly see that the buyers are in control of this part of the market. A little bit of well, these are kind of kissing right here. That's not totally separate, but we can, everywhere else we see that the buyers are in control. We're going to use this information. We're looking for confluence. We're looking for just confirmation. We're going to use market structure. We use everything we got. No way as a way, Andre. Be voila. That's Bruce Lee, for you guys who don't catch the reference. Andre laughed if nobody else did. But anyway, so let's go back. Aud Jpy. Okay, so we did all that up here at the higher time frame. So all right, let's start breaking it down. So we come down to the hour. I'm sorry, the 4 hour, and we can see the areas that we marked up. But let's just jump down to, because again, we see the same thing. We just see more candles. Okay, so let's just come down to the 1 hour. All right, because now we're gonna start setting things up. All right, so what do we want to do? This is, and this candle, this is everything from well, actually it's a little bigger. What's the date? This is the 23rd. I'm trying to get just the day. That's midnight the 23rd through right now. Okay, if that's right. It should be 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, all through 1700. Oh yeah, I think that's right. But anyways, all right, so this is where we are. So when we look at the market here at this level, we say immediately again, and I'm gonna use, try to get the resolution so that everybody can see this. Actually, let me get this. Let's move that out the way. All right. So, and again, I'm just going to drop some lines in here, just again for visual representation. What's going on? We're here. Oops. Price is working in here. And now, again, what do we see? We see, and like I said, we just talked about price is going to do what? We're in an uptrend because it doesn't stop. The fact that we identified that we were an uptrend here on the daily. So that doesn't change, okay? That fact does not change. Now we get down here on the hour, we start seeing, again, a breakdown of all of that kind of stuff, but it doesn't change the fact that overall, the market is in an upward trend. But now keep in mind, let me caveat that with the fact that what we want to do, we want to find out how we can capture the next 20 pips. That's basically what we want to now use the information to be able to capture the next 20 pips. All right. So we see in this little section here, we see where we had a low over here. I'm gonna just change the color. Let me draw a little line on top of that one. I don't want to get too messy here because it kind of gets too confusing. We have too much going on, but let's say we have that low, okay? And now, and I said a moment ago, we're in an upward trend until we establish a new lower low. This, where price is now, we have a We do not have a lower low. We have not established a lower low. So what does that mean? Let's get this even smaller. Let me show you exactly what it means. Actually, let's do on the full. It might be easier to do on the full. Yeah. Try not to put too many lines on here, guys, but hopefully it makes sense. So what does that mean? We talk about trends. Here we go. Again, we're confirming that we are in an upward trend because again, we have the market moving. We got these 2 points, a confirmation, boom, boom. The market is again in an upward trend. And we can also see, let's take this same line. Even though we had the market moving in this direction, we had the market taking a bearish direction. It didn't take out this low. It didn't take out, price came down here and rejected. Okay, let's show you this. And again, you just pull your lines. You just pull your lines and use your eyes. Say, okay, well, price came down here and rejected off of this area. And then what is it likely to do at this point? All right, and we can see that it's actually at another point of resistance here. This is resistance. This is support down here. This is resistance up here. So we start having those little moments like, okay, well, is the market going to go up or going to go down? And clearly we don't have that answer up front, but we try to look at probabilities, and that's why I hold on to the number one fact that we are in an uptrend. So if I decided to trade to take this down at this point, then that's kind of going to go against what I've already established. And if I trust what I say, I ain't got to be right, but I do have to trust it, that it's kind of going to go against that. So no, I'm going to be able to determine that price, the next move for price is going to have to push through this area of resistance and take out and rebalance this area here in the market, and ultimately return itself to this high up here. So is that consistent with what we see and with the harmonic scanner? Actually, well, I'm on the 4 hour. Let's go to the 15 before we go back to the scanner. So let's move that, get that out the way. So now I'm on the 15-minute, and we see again just a further breakdown. We see some more. Now we get some more information to do our analysis on, because again, every time you go down a time frame, it's like, you know, bringing a microscope to the party, and you get more granular information. So, and like we established here, this was our lower equal area, equal low down here that got taken out, and then the market came here, but it didn't establish a new low. And then what do we see again? We see another lower. Now we're getting lower, another lower high. That's that right? A high, yeah, higher low. I'm sorry, higher low, because we got a higher high, and then we got a higher high and then a higher low. So even though at this particular point in the market, we can see price went up to here, price did come up here and is now rejecting and closing, well, it hasn't closed, well, as of 5:30 or 5 o'clock today, it came back here to this level, okay? And what do we see at this level? We'll just pull this across just to see what we see. Sometimes we don't see anything. Oftentimes we see points of resistance. I'm not seeing any clean resistance until we get way over here, but it's a little bit of structure right in this area. So we'll have to see whether or not price respects this area. But ultimately, if I bring my fibs in, I'm expecting price to come into this pocket. Okay, people will trade with fibs and look for price to either come into the, a lot of people look for the 61. Some people look for deeper retracements here, and that's what the fib is, just a retracement measurement, very accurate, not 100%, but it is very, very accurate. And so price now, we can see the price has already come to 50% retracement. In other words, from here to here is halfway retraced. And also it is meeting up with some level of structure right here. So which kind of represents an opportunity for reversal. And then of course the 61 represents another area of reversal. Premium, I'm sorry, total discount would have it come down here about to the 88 mark, but I don't think it would probably come that deep, but it certainly could. But the bias in this instance is that the market is going to continue to the upside. And again, let's just show you one more thing, and then we're gonna go back to the scanner. So now, like I said, the whole point of this is so we can start learning how to exercise both sides of the scanner and knowing what you see in the market. Now, this line right here, this yellow line right here represents equal high, but this, okay, it didn't take out that. But let's look one more. Let me go up a time frame. It's just easier to see my targets. Okay. Yeah. So and we, even with the fib, you see where the fib, this 23% retracement, or negative 23% retracement. You see where that lines up? Let me just drop a line there so we can see where that lines up. So you can see where it lines up. And why that's significant. Okay. I'm gonna try to make it larger. I want you. And I hate to kind of call this science because really, I don't know if it is science, but it's math. That's what it is. It's mathematics. And when you start doing this stuff and you start seeing this, it's like, oh my goodness, could this be right? But look at this. And see, this is where it makes sense. This is my final confirmation. Because this candle right here, that little green candle right there is what's called an institutional candle. That's the point of interest. That's the last candle. That's the last buy candle before the market went down into this. Oh, I'm trying to describe the arrow, guys. This candle right here, that's the last candle before the market went down into this area and then just started doing this accumulation. So guess what? Guess what? What did I say? What did I say before? Is that price is going?
And the prejudice with the minority. The majority has to do it. So, you know, Doris, what do you think of this? And I know you won't hesitate to tell me along.
Takir. All right. So what we'll see, or likely to see, let me say it like that, what we're likely to see is price return to this same 50% of this candle. And guess what? When I put my fibs on it, guess what we see? Guess what we see? Price lines up actually at not quite at 50% of the candle, but certainly in that same area where price, where I got this little pink line, it comes into the wick of this last point of interest candle. So now, like I said, all of that said takes us back to, and again, we're leading from the scanner, and then we're kind of going back to the scanner. Did it leave us on that, or it jumped off of that? That was Aud Jpy. And let's bring the scanner back. I mean the sauce back on. All right. And then, so what do we see? Again, we see, and actually it's a little clearer here, I guess. I don't know what changed, but we see the little retracement on this last candle here, on the candle close, where the day closed, a little doji there. But again, we clearly see that market is bullish. Okay. We clearly see that the the buyers are in control. We see the buyers in control on the AO, and we can see strong trend with the buyers in control on the DMI. So again, all of that, and again, it wouldn't take me 54 minutes to run through that as I'm analyzing the charts. And again, when you do it enough, it's not going to take you 54 minutes either. It's going to take you about 3 minutes to kind of pull this information together. So, but once you do, now, in addition to what you would have been able to recognize over here and using the scanner sauce, you're now putting yourself in a position, again, from an information standpoint, because that's all this is. Like I said, this is a visual representation of price. It's a story. What's the story that's being told? How do I interpret this story? How do I interpret this story and be able to then turn it into, increasing my account 2, 3, 4, 5+% on a particular trade or group of trades or something like that. So what started here with just looking at, okay, wow, the market, this area here is trending up. How do I leverage? How do I confirm? Because last thing you definitely don't want to do is just jump in it. All right. You definitely don't want to, you're not here for that. You're here to learn how to enter the market, not just jump in and take those unnecessary risks and such. But again, with all that information under your belt, you could then enter a trade like this with some level of comfort. Even with the pullback here, you know that, okay, well, the market is likely to pull back. And here's a little clear, the market is likely to pull back to, maybe it might come back as far as this 71%, because this is, like I said, that other candle was a point of interest candle. I see another, this also represents a point of interest candle, because again, that's going to represent a point of resistance. And again, I don't make this up. Again, just follow my eyes. I said that candle, that little red candle, because you got your bullish candle, engulfing candle here, the green candle going to the upside. Then you had this little stutter candle, and then the price continued to take off until it retraced. So it has to rebalance itself. So it probably come down to this area. Now, what's going on in this area? Yeah, we see this little candle, but what else? Let's look left. He said, always look left. So I just pull my candle, pull it. I'm gonna just keep pulling. I'm trying to just keep it straight. And we can see where that along, again, this area, I'll call it area, where this area, and actually, let's do that. Let's use a rectangle, because I want everybody to really think about price and in the area, because price isn't always just, especially when we're looking at these areas of support and resistance, rejection zones and that kind of thing. They are just that, they're areas. They're not a particular particular line in the chart, or always just a particular price in the chart. Your area. So when price comes into this area, you're thinking a certain way, you're reacting a certain way, you're digesting certain information based on price in an area, not just price to a particular point. So anyways, with that said, and like I said, that candle that I highlighted, if you can still see it there, represents a point of interest for me. And then I just look left and I say, okay, yeah, support, resistance all through here, support and resistance all through here. So again, we've identified yet another area that price has respected. So again, and this is where, again, you stop panicking in trades, and just you see price falling down or going against you, and you start jumping out of trades, because again, you just haven't developed or solidified that foundational information to know that, okay, yeah, I expect price to come here. Okay, maybe I got in a trade a little early, so I'm okay with that. If your decision is to get into a trade, at a particular, you just rest with that and then accept the fact that, okay, and position your lot size so that you know that it's going to retrace. Let's just say you got in up here, which is probably a little late, but say you did get in it, and then you just prepare yourself for, about, what could be as much as maybe about a 20, 21 pip retracement. So don't set your stop loss at 20 pips. But again, you want to, if you got in at that point, again, you position your lot size such that you can handle that drawdown if necessary, if it does come down. But again, you're expecting that it's going to reject off of this area and then continue to the upside, because at the foundation of everything I just said, the one thing I'm gonna stand on is that we're in an uptrend. Until I see otherwise, I'm in an uptrend. Now, and that's one last thing. I'm gonna close on this. I'm gonna close, and that's why really you would really want to wait and try to get rid of this. You would really want to wait until price comes all the way back to this area for real before you got in. And if it in that way, here's the other benefit to that. You wait for price to come down to this, well, shucks. Yeah, wait for price to come down. I'll probably catch it at the wick, to be quite honest. I might catch it at the wick, between 61 and 71%. But what you put yourself in position to be able to do at that point also is set your real tight stop loss, because I'm not gonna let it ride to the end of the earth. So I might, if I got in on that candle, so I give myself, I guess maybe about a 14, 15 pip stop loss, maximum, depending on my mood. Actually, I might go way tighter than that, maybe about 4 or 5 pip stop loss. But, and of course you can get out anytime you want, but just to see how things are going. And this is not a lot of body to this candle. So there is then the potential for price not to respect this particular area. But again, you do have that area, you do have that evidence of price rejection. So, and I'm gonna say this last thing. I know I said, I was gonna say last thing a few minutes ago, but with that, one of the things that I see sometimes in the, or hear people say, and actually I've heard educators say, early on I heard educators say, I don't hear Manny say it, but where they'll say, and you see people in the chat, they'll mention, yeah, I think it's going to turn around. And again, that's just a general statement people will say to any given situation. I think it's going to turn around, or I think it might turn around. Man, if you think it's going to turn, if that's the sole basis of your analogy, is that you think something's going to turn around, then you got a lot of studying to do. Okay. And I would encourage people to stop trading actually and start training, so you learn this. So you don't have to say, I think it's going to turn around. You will know if it's going to turn around, and you will have, and if it doesn't turn around, if it doesn't respect a particular area, you will know that it's time for you to get out of that trade. I hear so many people contacting me about, I'm staying in trade too long, blah, blah, blah. I've been guilty of it too. And again, not too long ago, actually. But again, I had a reason. It wasn't because I thought it was going to turn around. I had a reason, okay? I had a reason. I had a technical reason that just didn't hold up. But nonetheless, it should be more. And we have the ability in this academy to do better than that, guys, ladies and gentlemen. We have the ability to do better than just having to think, wish, hope on this, all right? So with that said, I'm gonna jump off, and but again, go live. Find one of these folks. Stop just taking signals. Become the signal. All right. It's a whole bunch of folks over here that are ready and skilled, and all you have to do is get in these classes. And that, again, I don't claim to know anything, but I do know that I learned from these folks. I learned from several of these people on this page. And then, like I said, on a daily basis, I go through, I'll go back to Manny real quick. It's just easier. I'll let again, this boot camp, you got to go through the boot camp. Go through it 10 times if you need to. You think you think I just didn't recently review this one right here, yeah. Trends and channels and rules to engage. Yeah, go back to this stuff. Go back to this. You can't get this in one swing. You're not gonna. Well, I'm not gonna get it. You guys may be way smarter than me. Most people are not gonna get this in one swing. All right. So you go through this information, you digest this information, you practice, you go back, you practice, you win, you fail. No, let's say like this: you win, you learn. You win, you learn, You win, you learn. There's no such thing as a loss. There's only opportunity to learn in this, you know? So again, it's a lot. Take it a spoonful at a time and give yourself a break. Like I said, just, you know, remember you're a student and, you know, just stay humble in that. But anyways, kept you guys way too long. I appreciate everybody getting on. Hopefully somebody got some value out of this. And feel free to reach out to me. My telephone number, I usually have something quick I can put up. I'll try to find it real quick. But my telephone number is 240-273-2645. Try to find it real quick. Yeah, well, you got it now. 240-273-2645. I got something, I just can't find it real quick. Sorry, guys. Yeah, I don't see it. But anyway, 240-273-2645. Feel free to reach out to me, text me. And if I can answer your question, I will, or certainly refer you to a person who can. All right, so any questions before I get off? I see a couple of things in the chat, blah, 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 blah. Wow, that's a long one. At some point, maybe towards the end of the Zoom, please thoroughly explain pending orders. Okay, show example of each of them. Okay, by limited price of a particular line. Wait, okay. Can you show one more time how to set the coordinates in the deal? Okay, you set them out. Okay, who is this? Who's the iPhone? How do I set up my harmonic scanner to source? Who's iPhone? iPhone. Can't help you if I don't know who you are. Okay, maybe they'll unmute in a minute. Okay, hey Jolanda, yeah, you know, Jolanda, I'm gonna help you. But the other thing, Jolanda, we have kind of gone over just a little bit. I apologize. I wish I had read this. I certainly would have covered it. Can you and I talk? Just give me a call right after, Jolanda, please, if you have a minute. And iPhone, again, I'm not sure who that is, but yeah, you can give me a call. We can set up something to 240-273-2645. Oh, is there a way we can convert? Yeah, absolutely. Just send me a text, Jolanda, and we'll set up a time and go through it tomorrow. Actually, tomorrow is actually better. Tomorrow in the evening sometime would be better. All right, everybody. Thanks for getting on the call, everybody. See y'all.